Oh, man, I know you guys can hear me. If anybody showed up to the first live stream, first of all, hey, are we good? I think we're good. You know what? It's just one of those days. Yeah, you have to leave and come back. There we go. We got people coming in. Let's come back here. Oh, my goodness. Are we good? Are we good? I think we're good. Please, somebody respond. I see 8 people watching. Hold on. No idea. I'll tell you what. All right, we got 48 in here. We're good. We're good. So this is what I'm going to do. Hold on one second, folks. Yeah, this is what happened. This is what happens when you try to go live and it all hits the fan. I'm super bright. All right, we're back. Okay, we're good. Pop out. I got to pop this out because I see that I'm super bright. Okay. Whoops. Let's do this. Guys, if you're just joining me, sorry about all this. We're a little late. That's all right. We're good. We're good. Holy cow. What a mess. Listen, it wouldn't be Own the Chaos if I didn't have some sort of technical issue on my live streams, right? It's either the sound isn't on and I'm just talking to you and I'm thinking everybody's hearing me and you can't hear me or whatever. All right, let's get started. Welcome to Stock Watch Sunday, everybody. My name is Brad, and this is Own the Chaos. The stock market is crazy. It's chaotic, and I made it my mission to help you own it, help you make some money for whatever it is that you want to do. I've always said that, you know what? If you want to chase the Lambo, sure, fine, go ahead. But it's going to take a lot of work and a lot of time and a lot of patience to get there. And if that's what you want to do, cool. But if you are trying to do something a little bit more meaningful, maybe if you're trying to, go on that vacation or trying to, make some extra money just to make ends meet, whatever it is, I want to help you get there. And that is what Owning the Chaos is all about. So if you guys saw Friday's video, first of all, you guys were so responsive to Friday's video. I appreciate you so much. That was really a humbling experience for me. Man, you guys are great. I love the support that I get from all of y'all. That being said, we got Where I Was Right, Where I Was Wrong coming up in about 90 seconds. For those of you who saw the first iteration of this, sorry for all the repeating. But before I get into Where I Was Right, Where I Was Wrong, real quick, if I don't earn your subscription by tonight, I'm sorry. I hope that I do, though. I hope that it provide you with some kind of value tonight to where you're like, you know what, this guy's got it going on. I'm going to hit subscribe. But if you do, or if you've already been subscribed, first of all, welcome back. See the join button next to subscribe. Click that bad boy, and what that will give you is some of the cool-looking badges that Alan has here, a couple of other ones that you might want to take a look at. You see these cute little red bear? It's a nice little badge because he's part of the Chaos crew, Alan is. And what happens when you're part of the Chaos crew is that you get those cool little badges, and they change every month. And if you, not only that, but you get a watch list from me every single day of the week. You get 5 stocks from me that I see moving around the market that have some potential for a potential play, and a snapshot of how the market's moving that day. And you get it every single morning, an hour before the market goes live, before 9:30 a.m. Eastern Time. So you want to be a part of that and you want to help support this channel, click the join button. Would love to have you over at the Chaos crew. We have over 330 people in there. It's pretty amazing, and it's pretty cheap too. $4.99 a month. I think it's a pretty sweet deal. So check it out. Would love to have you there. And so yeah, let me welcome some folks here. Yeah, so listen. SHLL's on the watch list. It's not on the buy list, folks. We'll get to that, though. But before we do, let's get to where I was right and where I was wrong.
When Brad was right.
WGO last week. I said they'd beat earnings, and the estimated earnings per share were a loss of 40 cents. They crushed them. Came in with a loss of 26 cents. So they're still operating at a loss, which is, I was kind of hopeful that they would come in cash positive, but that's still very, very encouraging. Stockwatch Sunday, Winnebago was at 68.36, ran to $73.34 into earnings as we expected it to be, pulled back due to the rest of the market dumping off, unfortunately, but I think this is going to be a great opportunity for Winnebago moving forward. We have already seen the amount of demand coming for these stocks. Guys, it's been absolutely insane. So in my opinion, I still say that being bullish on a WGO is going to be a good idea in my opinion. Next, we have Rite Aid. Rite Aid, I said they beat earnings, and they did. Estimated earnings per share were at a loss of 54 cents. Actually came in at 4 cents positive. As last Stockwatch Sunday, it was at $12.41. Ran all the way up to almost $17 a share. An incredible run here, but probably due to pullback this week. If you missed your chance on Rite Aid, I would probably wait for it. I don't see Rite Aid continuing to make this kind of move. It's been pretty nuts over the last couple of days. Next one is McCormick. I always try to mix it up. McKesson and McCormick, they're so close together. They would I said they would crush earnings, and they absolutely obliterated them. And I said that was going to be the only way that McCormick actually moved, and of course it did. Estimated earnings per share were at $1.16, came in at $1.47. Said I liked it at $1.70, $1.72. You had that opportunity before earnings this week, and it blew away earnings, like I said, and went all the way up to $182 per share on Friday, and this keeps going, in my opinion. Lastly, where I was right, as of last Stockwatch Sunday on UONE, Urban One, if you guys recall, I said that this was too high. Suggested it ends up being a repeat of some of the other stocks that we've seen, GNUS, Hertz, you name it. And the price didn't make any sense. Sure enough, it came from $36 as of last Stockwatch Sunday all the way down to $20 a share. Now,
when Brad was wrong.
I was wrong on Nike. I thought Nike actually had a shot at beating earnings. Turns out they lost. They missed earnings horribly. It was terrible. I was hopeful that their e-commerce platform would have withstood some of the closures of stores and that sort of thing. Turns out I was very, very wrong on that. But I would say that the reaction was actually pretty lagging. The reaction as far as the price is concerned. I think it closed at around 96 or something like that, 95. I have to go back and look. I think that, I'm sorry, it came back to 92.51. And so I think that that's actually an area of support. I had it written down here, sorry. And I think we could see a nice bounce if it holds that area around 92.50. We'll see. I'm not hopeful on Nike, but we'll see. Nike always comes back. They always crawl back through these recessions and these types of dips. And I have a lot of faith in Nike. So that being said, where I was right, where I was wrong, I hope you enjoyed that. I do that every single week just to kind of hold myself accountable. So you guys can say, hey, you know what? This guy who trades for a living has been doing it, quit his job 2 years ago. Doesn't always get it right, but it's about managing risk. So I managed that risk. Still live to fight another day. I did great on a lot of the other plays that we talked about last Stockwatch Sunday, and yeah. So everybody, if you come across a YouTube channel and they tell you that they are right on everything and they nail every trade, they are lying. And so I just want to provide some more transparency and clarity on that. Kind of hold myself accountable for every Stockwatch Sunday. So I hope you enjoyed that, and we will be getting on to tonight's features, which will be, first off, Shell, SHLL. Now, here is the thing, guys. Had a massive move on Friday. I said, and this wasn't one that was featured on last Stockwatch Sunday, but I will go ahead and admit that I was wrong about this one as well. Okay, I was wrong about the actual move. Somebody asked me about SHLL, and I said that I would stay away from it. But you know what? If you ask me again, and I still only had that information from what I went off of last week, I wouldn't have changed a thing. If you guys don't know what Shell is, they are a company that is reverse merging into, Tortoise Acquisition Corp. And it's another semi-truck company, similar to the business model of Nikola. They're a little bit different. They actually have products and trucks on the road. They have hybrid vehicles on the road. But I think, guys, if you didn't learn anything from GNUS, Hertz, Nikola, Ship. And I say Nikola because people bought this in the 90s, and I told them that was just not a really good idea. And it's dropped 30% since then. And trust me, Nikola is not done. Ship, NAT, all of these. If you learned anything, if you guys got stuck in those, if you're baggy on any one of those stickers that I or even Urban One from last week, take those as lessons. I'm not saying that Shell can't keep going. Not saying that at all. But understand the risk. If you bought in that $10 range and you crushed that, amazing trade. Good for you. I hope that you took some sort of profit, because the thing of it is, I see this running theme. There's been a lot of you that have just started out trading, right? Because maybe the Rona's got you locked up in the house. And so you're like, why not? I'll start trading. And I know that because I've had a lot of comments from you to that fact. And so what I'm trying to do here is to keep you from losing money on Shell. I'm not going to sit here and say, yeah, it's a clear buy. Why would I do something like that? This company's reverse merging. So what you don't know if you don't know what a reverse merger is, let's back up. It's kind of like an IPO without the IPO. They get the reverse merge into Tortoise Acquisition Corp, and it's one of those things where they kind of work around the IPO. They get over the red tape. It's a little bit cheaper to kind of get into the public trading space without having to like go through all of that as far as an IPO is concerned. But the risk is that they can just do an offering right out of the gate, right off the bat. An IPO, they at least have a lockup period, and that's what we saw with Nikola. Nikola now has 77 million shares ready to just dump on anybody at any given moment, and I guarantee you we will see that with Shell. So that being said, trade it at your own risk. This is a Stock Watch Sunday, folks. It's not Stock Buy Sunday. So I just want to be clear that this is one to watch for. I'm sure that there's potential for this to keep going. The share structure is very, very small, and there's a lot of people that are getting into this, and just the FOMO is just insane. But we've seen this time and again now, especially with some of the crazy runs that we've seen. And if you made your money, great, but this is not a sustainable move. It's just not. So my thoughts are, I'm trying to protect you from losing money on this one. If you want to get in, if you have to have it, know that you're getting in and that it is a gamble. You're now approaching gambler's mentality. And if you're in this, if you've been in it since $10 a share, and you're holding on to this thinking that it's going to make you rich and it's going to change your zip code and change your life, again, gambler's mentality. Manage the risk, folks. Manage the risk. If you want to be on free shares, sell half your position if you've doubled it already. I ain't got no problem with that, but protect your capital, man. Protect it at all costs. I don't hate everything in the EV sector. I love Tesla because Tesla's proven something. These other companies haven't. And I'm not saying that SHLL won't, but I'm not buying it all the way up here. And I love Nikola too. If Nikola comes down and they actually create a product, I'll buy it, but I'm not buying it at $28 million market cap. Are you kidding me? Give me a product. Sell something. Then I'll consider buying it at a fair price. Right now, it's not a fair price. And Shell is the same thing. It's not at a fair price. It's not. Been doing this a long time, folks. Been doing this a long time. I've seen this movie before. And if you've been trading for the last 8 weeks, you've seen this movie plenty of times already. So, again, not saying that they won't continue to run here, but you know the risk going into it. Okay? Next one we're going to talk about is Facebook. Facebook is tough stuff on Facebook on Friday. So here's what's going on with Facebook. If you guys haven't heard, there's major companies that are pulling the plug on them. They're boycotting their ads on Facebook. So you have companies like Starbucks, Verizon, Unilever, others, and they're boycotting in regards to allowing some of the speech, I guess, that gets on Facebook, which I'm kind of curious as to why Facebook is on the hook here and platforms like Twitter aren't, because Twitter is god awful. If you want to talk about hate speech, it's all over the place on there. Either side of the political spectrum, either side of whatever spectrum you're on, it's everywhere. There's naked people on Twitter. But nobody has a problem with that. They got a problem with Facebook. Here's the thing that I think is going to happen with these businesses that are boycotting Facebook. It ain't going to last. You know why? Because there's 8 million other companies, small businesses alike, that are on Facebook, and there's more people going into Facebook than are leaving Facebook. And that being said, obviously, I think that I think it's pretty clear that I'm now bullish on this. And I have been bullish on this for some time, and I think that this is going to be a really good opportunity for you to get in on the dip on Facebook. Despite however you may feel about whatever conspiracy theories or whatever your opinions are of Mark Zuckerberg, the company is crushing it, and they will continue to crush it. The ROI that you get on ad spend for a company like Facebook, who can specifically target your demographic like that. I mean, how many of you have even just talked about a product and it shows up on your Facebook ads in your news feed, right? That's the power of what Facebook can do for your business. And if these larger companies want to leave them through the end of the year, so be it. It's their loss. They're going to lose a ton of money. What are they going to do? Put ad dollars into TV and radio? Yeah, let me know how that works. I mean, Google, sure, but they're in the same boat as Facebook. I don't know. I think it's dumb. I think Facebook comes back. If we're looking at the chart here, I like the chart here at 216. I'm sorry, no, I'm just kidding. I liked it at 224. It broke through 224. Now, if we're looking at the chart here, I think that 209 could be a reasonable area that it pulls back to. So what I'm looking for on Facebook is for it to pull back to 209.50. We'll see if it has a little bit of a bounce here. And so that's what I'm looking for. I'm looking for it to come down to that support and confirmation of some sort of bounce before I would consider scaling back into this. Or, if you didn't get into it before it ran back up, then that would probably be a good spot to enter in on. If it breaks through 209, it probably comes back down below 200. So if you see this at 197 here, where I have this marked here, that's going to be a spot where I would look for on Facebook. So, yeah, Facebook was 212 after hours. It'll be back. I'm telling you, it'll be back. All this crap's going on with Facebook is nonsense. You guys with SHLL to the moon. You're cracking me up. I'm telling you. Don't make me make a meme about you. Don't make me do it. Anybody who follows this channel in the community tab, don't make me make a meme about you. Okay. FSLY. Next one this week. Guys, this thing keeps ripping. I gave you FSLY back in April. Back in the 50s, I gave you FSLY. So if you were able to get in on FSLY then, you've almost doubled your money. And so at this point, if you bought in at that point, I would probably consider taking some off the top, trim some here. I think we see a pullback on FSLY. It ran crazy. So if you guys don't know what FSLY is, this is a company, it's a cloud computing company, and this is going to be absolutely incredible moving forward in the space of remote work. You guys know, if you've been on my channel for more than 5 minutes, you know how bullish I am on anything related to remote work and working from home, wherever. I think that FSLY is going to be one that continues to move. I've talked at length at FSLY as far as the fundamentals are concerned, so I'm not going to get into that. What I would say here on the technical space, though, is that I think it's due for a pullback. And I think that it could potentially pull back to this area here, right around $81, $82 a share. So if you're looking at this one, I would say that would be the spot that I would look for a pullback. If this pulls back to 82 and then bounces from there, that is a sure sign of strength and really healthy for the momentum of this stock. I think that FSLY hits $100. When that'll happen, I think it's relatively soon. I don't think that happens this week, though. Maybe it happens within the next 2. But I think FSLY is $100 bound. And so if you're looking for an entry or if you're looking to add to the dip, I would look for a dip around 82.23. One of my favorite remote work stocks is FSLY. Want to know what my second favorite one is? It's CrowdStrike. And that's the next one we're watching. This actually had a really nice pullback. It pulled back with the rest of the market on Friday. CrowdStrike is a cybersecurity company. If you guys haven't been watching my videos or you're new to this channel, CrowdStrike is one that I think is going to continue to move here. I called the $100 move from $75 a share. I think it goes right back over $100 after this pullback here. I would love to see CrowdStrike come back to $90 a share. I don't think we see it, to be honest with you. I don't think we see it at all. I think that CrowdStrike bounces off of this $90 area from where it closed at on Friday. and it makes another move towards $100 a share. I think CrowdStrike sees 125 before the end of the summer. We'll see if that happens, but that's what I'm looking for on CrowdStrike. If you're looking for anything, especially if the market continues to do what it's doing and it starts to come back down, and we're looking at futures right now. Futures are down quite a bit. So if you're looking at stocks that you want to hang your hat on, as far as, what can I get into that, is kind of immune to the Rona, right? Is immune to the recession. Companies like FSLY and CrowdStrike are going to be there, and Facebook. These are all companies that are going to do well despite what's going on in the stock market. And like I said, Facebook, with its little pullback, it's going to probably have a little bit of a reaction tomorrow as well, depending on who else decides to get onto this boycott bandwagon. But I think Facebook is going to be another great opportunity, like I said. And these three, other than SHLL, the three that I've just talked about, Facebook, FSLY, CrowdStrike, these are going to be companies that you're going to be able to get into and feel safe about. And the reason I say that is because, like I said, the remote work and all these other smaller companies. I mean, you look at these smaller companies that are starting to build virtual presence, and CrowdStrike is going to become even more high in demand and even more relevant. FSLY as well, and Facebook. You're going to need Facebook to advertise with if you have a small business, especially if it's out of your home, especially if you need the internet to promote your company. You need Facebook. You just need it. It's a fact. Facebook, FSLY, CrowdStrike, and finally, folks, Smith & Wesson. So, let me give you a little history lesson. Anytime there's an election coming up, gun sales go up. Gun sales go through the roof. Not only that, but given all the other garbage we've gone through over the last couple of weeks, last 2 months, it's given another reason why gun sales have gone up. Analysts are so bullish on Smith & Wesson, and I'm looking for Smith & Wesson to go up above $20 a share. I think that happens this week. It's been making some really strong moves here. If we look at this right now, 1948 seems to be an area where it's met resistance here a couple of times. And so I think that if it breaks up over 1950, that $20 a share mark is kind of going to be that mental resistance for a lot of people. And once it breaks over that, I think we see a nice move here. I like a bull move on Smith & Wesson to $24 a share. I think it gets there. The other part of the history lesson is that if a Democratic president or Democrat president gets elected, you see gun sales go through the roof. You can just look through all the past moments in history when a Democrat president was voted in. That's what happens. And I'm not saying anything. I'm not being politically biased. It's just the truth. Go look it up. It's facts. So that's why I think that Smith & Wesson is still very much there's still very much a bull case for Smith & Wesson. Here's the thing. If it does happen to pull back, I like it here at $19.20 or $19 a share, or by some chance it has like some crazy sell-off, $17.82. So right there around $18 a share. Any pullbacks on this, I think, are worth scooping up on Smith & Wesson, and I think that $20 a share is going to get broken, and it will be a crazy day if that ends up happening. So there you have it. Those are the top 5 stocks that I am watching this week. Again, guys, it is a watch list. This is Stock Watch Sunday, not Stock Buy Sunday, not Stock Sell Sunday. Stock Watch Sunday. There we go. All right. So now that we got that out of the way, let's get to your questions. This is my favorite part of So let's go ahead and take a gander at those. Oh, maybe I will. Let's scroll down here. There we go. For Walter Toma, Workhorse, WKHS has been climbing, and I don't see it stopping until 20. Let me screw back up here. I missed it. Oh, no. Okay, here we go. I don't see it stopping until 20. How do you feel about them? So Workhorse, here's the thing. So WKHS was a pretty strong mover about a year and a half ago, 2 years ago? Am I thinking back that far? Too far? I think that Workhorse has definitely been something that has had some movement to it. Oh, come on. Something's going on here. WeTrade HQ. Let me pull this up here. But they've had some movement because, again, they're trying to get into the EV space as well. This has had cents a share. Again, here's what I will say. Companies like Workhorse, Shell, all these, they're what considered SPCE, the Virgin Galactic. They're what's considered a speculative play. There's speculation. There's a lot of what ifs that have to happen in order to make this company extremely valuable. And so Workhorse, they've been around a while. They've been around a long time, and I believe it was rumored that GM was trying to get into their business. I don't think it ever actually amounted to anything, but they could potentially continue to move here. I like a break on Workhorse up above $10.30, but understand this, and this is the same argument for Shell. If you buy into Workhorse at $10.30 a share, understand that you're buying something that's moved already 350% in the last week and a half. So you're buying someone's shares that, somebody else who already made profit on something from $3.60 a share potentially. And so that's the risk that you run with something like this. When the market is all over the place and it really can't pick a direction, speculative stocks are usually the first ones to go. And we saw that with like SPCE, right? With Virgin Galactic. I'm not saying that Workhorse can't go. And I know that people people get so emotional when I talk about stuff like this that's moved so much, and they're like, oh, it's going to the moon, man. Listen, like I said, I've seen this movie before. It's probably not going to sustain. There's no way it can sustain this kind of move. And there's going to be a dip. So if you're going to look at this and you're really passionate about Workhorse and you absolutely believe in the company, fine. Let's put that argument to rest. I agree with you. I think that Workhorse has some potential. Do I think it's worth $10.30 after it's moved $3.60 from $3.60 in a week and a half? Hell no. I ain't buying it all the way up here. I will wait. And if it leaves the station without me, so be it. You know what? There's thousands of other stocks I could trade with potential setups. Workhorse can leave the station without me. I'm not going to buy it after it's moved 350%. And so, like I said, I'm not saying that you shouldn't buy it. I'm just saying understand the risk going into something that's moved that much so fast. Okay? Again, I'm here to help you make money, but I'm also here to help prevent you from losing it too. So go into it with that understanding. If you can afford to lose any of the money that you put into Workhorse and you want to take a chance at it, just understand you're taking a chance at it. All right? So, next question. For Taylor John. Say, Brad, hope your weekend is treating you well. Thanks, man. Appreciate you. Weekends doing pretty well. Thanks. Appreciate it. I hope yours is too. Recently just got into MGM in the low 16s, looking at lowering cost basis on them as it drops. Are you still bullish on them? Absolutely. Here's the thing about MGM. They're still open. People were high on MGM when they opened and then sold it all off because of Rona fears, right? This is why I still like MGM. And I've been bullish on MGM since $12.50. This is 10 weeks ago now that I've been bullish on MGM. And I've been getting a lot of grief from people about MGM for some reason because it's come from $21.25 and now sitting at $15. It's dropped 25%, which is still a significant drop. But this is based off of the fear factor, okay? But my stance remains the same. MGM's insider buying has been absolutely crazy. Now, insider buying versus insider trading are two different things. We need to be clear on that first. Insider buying means that there's officers within the company that are publicly making it known that they are buying stock of MGM. So that is insider buying. Insider trading is illegal. Insider trading means that you bought or sold something because you knew information before the rest of the public did. So that's not cool. MGM, though, their insiders bought stocks, made it public in the form of a Form 4. And so they bought a ton of it. Even around this $16 area, they bought a ton of it. Why? Because they know what they have. They know what kind of company MGM is. And their balance sheets are incredible. They have enough cash without having to take out any loans or anything like that, any kind of handouts. They have enough cash to last through 2022. So people are going back into MGM. MGM's opening up more casinos despite all of these spikes that are going on. And they're now requiring people to wear masks and that sort of thing, which is fine. But MGM's going to be just fine. You just have to be patient with it. I see a lot of people looking at the short term. MGM to me is a longer term play. It's one of those epicenter type stocks. But I think out of all the epicenter type stocks, when you look at them as far as like airlines are concerned, or if you look at them as far as like the cruise lines are concerned, MGM is a much better setup to do well out above this once we start to get things rolling again. And I think that MGM is still a very solid play. So yeah, stick it in your portfolio. In my opinion, I would stick it in my portfolio and not worry about it. Not even look at it. Keep yourself liquid, trade some other stuff, and let MGM do what MGM's going to do. Alrighty? Yes, I still like it. If you bought it at $21 a share, I'm sorry, but I told you all about it at $12.50. So for Taya Rogatska, I hope I pronounced that right. What are your thoughts on Oxy? Went up 60% last week and went back down this week. So here is the thing. Oxy is another one that Warren Buffett divested from. Now, not that that means a whole lot, because he also divested from the airlines too soon, and then he also bought them too late. So that was a little crazy. But he divested from Oxy. But he's not the only one that's divesting from companies like Oxy. We have BlackRock, the largest financial investment firm in the world, $7 trillion under management, and they're working their way out of and they already have mostly out of anything oil related. Oil stocks are not what they used to be. It's crazy to think about, right? Because back in the 70s, 60s, 80s, even 70% of the stock market was made up of energy stocks like oil, like coal, what have you. Now, 3% of the stock market is made up of energy stocks, and that includes oil. And I understand the allure here. It's cheap, right? It's come down so far. It might make for a nice little play here, and sure, it could. But my thing is that I would be cautious here on something like Oxy, because oil is just not in demand like it was, and it's not going to really. I don't think it's ever going to come back to where it was, whatever that means, right? From like, let's just use it from like 2015 numbers or even 2020 numbers. Beginning of 2020, oil was actually, demand was actually coming down in 2020, but it was still pretty high. I don't think it gets back to that point. A couple of reasons: remote work is not going to be a thing anymore. I'm sorry, remote work is going to be a thing now. So, oil is going to become even more or less desirable because people aren't going to be commuting as much. You have the EVs that are coming after them. And we already talked about how the UK is no longer going to be allowing new vehicles after 2034 that have internal combustion engines, which is a big deal. I'm sure other companies will follow suit. So yeah, I mean, I understand the allure here with Oxy because it's come down so much after it's run up. But the reason that it ran up was because it sold off, oil itself sold off in negative territory. But I don't think that oil comes back here. I think it's a really risky play. If you're looking at something like this, it's short, it has a nice little decent support around 1750. I would just be very cautious with it, though, because I don't think it lasts very much longer here up in this area. And I would not be surprised if this continues to come down even further. Okay? Thanks for the donate intellectual reads. I saw somebody else donate too. I'm sure WeTradeH admin is on top of that, and I totally forgot to thank them. But I hope that. I wonder if I can. I'll go ahead and answer this next question for one. 602. Holy cow. Sweet. If you guys are liking this, give me a thumbs up. 602. That's a damn record. Hey, WeTradeHQ admin. While I'm answering this question, can you find out who else donated here? I got one person. I always just like to shout them out. So if you guys could do that, I'd appreciate it. Okay. Let's see here. For Juan Hernandez, I bought some AMD. What do you think about that? Love the CEO. And by the way, the business is going under 50. I believe is a fair deal. Look, I love me some AMD. Let's go look at the chart here. Let's go look at the chart on AMD. AMD does not belong here. It does not belong below $50 a share. In my opinion, it is a very clear buy. And Juan, I am right there with you. I love the CEO. I think that the CEO is incredible. Took this company from a $3 stock all the way up to near $60. I think it belongs over $60 a share. It blows my mind when you see companies like Intel, Nvidia that are doing so well. And AMD is a contender here. They're probably second place when it comes to chips. Intel's still first, in my opinion, but they are right there as far as being competitive, and they're moving their way deeper into the market share when it comes to chip making. And AMD 100% bullish, in my opinion. I don't even care what it does in the next month. For the next year, for the next 2 years, AMD will be an absolute monster, in my opinion. And so I think that it's a clear buy under $50 a share. This is way oversold, in my opinion. Yes, it's a buy, in my opinion. Again, this is not financial advice, but if you just want my thoughts on it, I think AMD is very much a buy below 50. It's insane to see it down here. Absolutely insane. Makes no sense. Makes no sense in my opinion. Intel reads, yes, donated. Jordan, thanks for the donate. That's what it was. Jordan and Taylor, thanks, guys. I appreciate you. Thanks for the donates. I always just like to shout you guys out. So 618 folks in here. That's awesome. Hell yeah. Okay. Let's get one or two more questions in here. I be cursed. That's an interesting name. What do you think of EROS? They have a merger vote with STX Entertainment tomorrow. Corona proof. Okay, let's see. EROS. Guys, 602. That's amazing. You guys are incredible. You guys are absolutely incredible. If you're visiting for the first time, first of all, welcome. That's crazy. If you're visiting for the first time, welcome. If you're, obviously a returning subscriber, you guys are amazing for just the support you've provided for me. This is absolutely incredible. 618. That's nuts. Okay, so EROS. I like the chart here. The thing of it is that it is a penny stock, so understand this with going into it. And I speak because I have a lot of experience in penny stocks. For those of you who don't know, for all 600 of you, I actually started my YouTube career and my trading career on penny stocks, and I still trade them to this day, over-the-counter penny stocks to be exact. And so what I want to preface this with is that you need to understand the risk that you're taking here when you're trading a penny stock like EROS. They have a lot of debt. So they have a lot of shares that they need to convert from that debt, which means that this could be slow moving. But if they have this potential merger, that could definitely be a catalyst. I like the way that this sold off on Friday and actually bounced quite well. That being said, I would like to see this get back over $3 a share before I would consider starting to scale in on this. And that's what I would do. If I saw a value in EROS and I wanted to take a position on it from a technical standpoint, I would look for a break back over $3 a share, and then start to scale my way in that way, chunks at a time, right? When you're dealing with penny stocks, you have a couple of things against you. Liquidity is one of them, meaning that it may be difficult for you to get in and out of a stock depending on how much you're in. So scaling in and then scaling out makes a lot of sense, but you also have to do a lot of extra DD on this. I think the catalyst is there. The problem is that if everybody already knows that the catalyst is coming, then there could be a situation where it's like, a sell the news type of thing. Once the acquisition goes through, then everybody sells off, and then it becomes boring until they do something great again. So that's the cycle as far as these types of stocks are concerned. If you know that going into it, though, and you still see value, then by all means. Again, I like that break over $3 a share. If it breaks over $3, could very likely continue to go there, at least to maybe about 330, 335 will be the next area that I would look for. So, all right. 2 more questions for Intellectual Reads. Thanks, man. Thanks for the donate, too, man. I appreciate you. What do you think about AAXN with all the political protests and police reform? AAXN, I got to be honest with you. I don't know everything about AAXN. Steve King, thanks for the donate, bro. Who was the other one? Web. I know who you are. The web guy. I know who you are, man. I just want you to know I didn't go unnoticed. AAXN, Axon Enterprise. This was one that I was looking at not too long ago. I agree that this could definitely continue to move based off of the current climate. What I would like from them, though, is some sort of break over $98 a share. More specifically, if you want to look at $97.74, that could be a nice little break. It almost came back down here to $93.50. I've had my eye on this for some time. It almost came back down to $93.50. We'll see if that actually happens. But I do agree with you as far as sentiment's concerned. If you want to do a long-term swing on this, I got no problem with that. You can kind of see that there's a small cup and handle here on the 30-minute chart, which, if you don't know what that means, basically this is a pattern that's forming. It's a bullish pattern that's forming that kind of looks like a teacup. If you can kind of like imagine this looking like a teacup, like a profile of a teacup. And so this could very well, make a nice, decent bull move if we can get it to break up over that 97.75 area that I pointed out to you. So yes, I think this is definitely a good one. Just have to wait for that specific setup, in my opinion. All right, let's get to the last one here. You guys are amazing. Give me a thumbs up, guys, if you're getting value out of tonight's video. And if you have not subscribed yet, hopefully I earn your subscription. Again, if you want to hit the join button, get you to be a part of the Chaos crew. Would love to have you there. We have 333 people, I think, in there, last I looked. It's a great little place to be. If you want to get a watch list for me every single day before the market opens, you'll get that for me as part of being the Chaos crew, and you get cool little badges. So you can see the people that are in the Chaos crew with the little bears and bulls next to their name. So 676 people tonight. That's awesome. Last question. Did I get to the last question? King Bradicus. Of course I'll do one for King Bradicus. What's up, brother? Anybody who's got the name Brad, I'm answering that question. I'm just kidding. King Bradicus has been around for a long time. He's an OG. I love you, man. All right. Do you think Peloton can break 60 this week? 100% yes. I think Peloton is an absolute monster. Now, is Peloton a buy all the way up here? That's really tough. That's a really tough question to answer. The only way that I would see Peloton to be a buy up here, or to be something that would be good to like add to a dip or something like that, I think that Peloton would be a good dip grab maybe if it came back down to around 57, like 57.30, somewhere around there, or also maybe around 53. Those would be areas that I would look for. I got to be honest with you, I don't see that happening. So when I'm looking at Peloton and I'm seeing it at $60 a share and it's still ripping, this is one of those situations where if you're not in Peloton, I would consider that a missed opportunity. It's kind of like Zoom. I talked about Zoom way back when everybody thought I was crazy that Zoom was overvalued at $115 a share. And where's it sitting at now? Did it break 260? I think it did break 260. Yeah, 260 on Friday. So, if you missed this, you missed it. Your window of opportunity is gone. But if you're in this one, and I don't know if you're still in this one or not, Brad, but I would say if you are in this one, it may be a good idea to start trimming some off of your position if you've been in this, because we talked about Peloton back into the early $30 range, and now you've almost doubled. So if you have not sold anything, it may be a good idea to start trimming some off the top, and then kind of protecting some of that capital, your initial investment amount, and letting the rest of it ride. But I do think that Peloton continues to move well above $60 a share, especially because of the spikes that we're seeing. And again, the allure to the remote work, which is going to be more of a thing. How many people are really, really ready and willing to go to a public gym right now? They're not. And Peloton is backed up like crazy. If you ordered a Peloton today, you're not going to get it for another 8 to 12 weeks because they are in such high demand right now. And it's absolutely insane. So for that reason, I do still think Peloton's going to continue to make a bull move here. $75 a share is not out of the question, but I don't know if I would buy it all the way up here. Okay. That's it, guys. Thanks so much for tuning in. 600 and some. Hell yeah. You guys rock. It was a record Stock Watch Sunday. A record Stock Watch Sunday. Again, I'm not trying to blow you guys away and make you think that if you follow me, I'm going to turn you into a millionaire in a week or so. That's not going to happen. That's not the reality. You want the real thing, you come here, and I'll give you the real thing. It takes hard work, dedication, and, some real discipline on your part to be able to do this successfully. I've been trading. It's been a career of mine now for the last 2 years. I quit my job 2 years ago to do this full time and be with you guys on YouTube. And you guys have been absolutely incredible. The impact that I've been able to make on your lives is nothing to the impact that you've been able to make on mine, folks. You've been absolutely incredible. I love you guys. I will see you tomorrow, as always, before the bell. And B. Smith is out. Have a good one.